Sellers started off the week finally closing the election gap that we've been watching for the last month or so. But that's about all they got done as buyers ran away with it for the rest of the week, assisted by XLV and XLF maintaining over daily demand zones, something that we've been watching for. So, is bullish rotation back on the table? Are our buyers out of the woods yet? My name is Lamont. I've been a full-time trader for 8 years now, part of the ChartGuys team for half of that. And in this video, we'll address those questions and more. So let's get into it. All right. So starting off with SPY here. So if you'll recall from many prior weeks, we were watching this election gap, right? This election gap, or rather the reaction to the election, the gap reaction to the election, not negated after one attempt here, two attempts here, three attempts here, and then finally the fourth attempt is what was when the sellers were able to finally close this gap. But like I was saying in the intro, there really was no acceptance after this fill, and then buyers ran away with it for pretty much the entirety of the week. So the way that I'm viewing this is, if you recall again from prior weeks, we're just constantly building our narrative, right? Like we are taking information, market generated information, that's pure information that the market is telling us, and we are assessing, okay, well, how is price reacting to this prior market generated information? Is it either affirming it or negating it, right? Because we just always want to think about the market from the perspective of change, and that way we can call the market exactly for what it is, and by calling the market exactly for what it is where we can find our best location for trade. Okay, so this change is what the change that we're watching for. So again, didn't negate it, didn't negate it, didn't negate it, didn't negate it. Finally negated this change, but very little acceptance in the gap. And I think it's very notable that we failed to touch down on 574.71, which is the high of this guy. So this demand zone is the demand zone that's sitting right on top of the July 2024 high. So we know that just like if we don't find acceptance under the high of November 5th, that this election gap is not negated. The same can be said for if we don't find acceptance under 565.16, then this big old breakout from September is not yet negated. So this guy sitting right on top of the July high, which is what held a very notable backtest here, held a very notable backtest here, is the next objective for the sellers after they fill this gap. And not only do they fail, they come super close to it, they get no acceptance, and then you get a huge rip off of it. So, that suggests that there's still a lot of demand coming out of this structure. Again, this is a very low volume area. So, to not be able to come through this relatively easy work for sellers is, again, a very notable failure. And so this big old bounce now makes space for a potential higher low over 575.35. And what I care more about than that potential higher low is where that higher low forms, or can that higher low form? And so again, we just go back to our references, right? So we look at, all right, well, if we're going to hold over here, we know the all-time high supply is the true test, right? Obviously, getting over the all-time high supply, getting over its point of control at 607.55, affirming this guy is demand is full steam ahead for buyers. Now, there's this tiny little bit right here sitting just under the all-time high supply that was established from November 7th to 14th. And you can see how it was reactive, or rather meaningful. Over here, there was an initial pullback from the value area low, or actually we should start all the way over here with these back tests of the point of control affirming it as demand, and that's what led to this new breakout. Obviously, the FOMC reaction sends us back down under this structure. You lower high, or attempt to lower high right off of it, fail, come all the way back to the all-time high supply, can't find acceptance over the low of the all-time high supply, and then essentially balance under the supply sitting right under the all-time high supply, again from November 7th to 14th, and over this October structure for throughout pretty much all of this, right? Even this dig down into this November 5th session technically doesn't really get to the low of this range. We're watching for how this range gets resolved right now. So this is actually a miss of the low of this range and the high of this range. Okay, so now, what we're looking for next week for that potential higher low is, can these buyers now find acceptance over 594.37, which is the low of this structure? Because as of right now, this structure is still being affirmed as supply as long as we're holding under 598.16, which is the case right now. So what these buyers need to get done then, in order to be positioned well to have a crack at this all-time high supply, is find acceptance over 598.16. Now, we're already a few days into this bounce, so it would not be surprising if we were to see some consolidation, some retracement next week. And how healthy that consolidation retracement is is going to be based on how much acceptance these sellers can find under 594.37. If we get a situation next week where you just can't get acceptance under there, eventually we find more acceptance over 594.37, that's essentially the buyers playing defense off of this structure, which again would keep them positioned really well for a go at the all-time high structure. Okay, so really we very much care about 594.37 next week, and you can see the market has told you that it cares about this structure, right? Because here you have the high of this session pretty much right at the low of that structure, and then look at the high of the day and the low of the day of Friday's session is right off the value area high and right off the value area low. So the market right now is trying to resolve this structure. Okay, so how it does so, or whether however it does so, it could resolve either way, right? Upside down, does we don't know. How it does so will set the tone, of course, for the next following weeks. So that is pretty much it. I think we had talked about using the old zone, right? So I think we had a more aggressive zone that was stopped out here, and I was saying, you know what, like honestly, looking back, and this is one of the benefits of using volume profile, right? Because using volume profile in conjunction with thinking about the market from the perspective of change, the primary benefit, or one of the largest benefits of using this kind of methodology, is that you kind of know where your location is, like you know where you're willing to play, right? Because these are all areas where there's some kind of change, right? Where it was indicative of some kind of change, or it's representative of some kind of change. And if we're always taking our trades where there is the potential for change, or where there's a potential for change, then we can get our risk really tight, right? The closer that our risk is, obviously, the more size that we can have. And so we just want to always be taking a trade where there's some kind of indication of change, which is why a lot of my day time frame setups are based off of the open, right? Because the open is indicative of cash market control change, right? If buyers are over, if the market is over, prices over the open, buyers are in control of the cash market. If we're under it, then obviously sellers are in control of the cash market. If we're outside of yesterday's high, if we're above yesterday's high, obviously day plus buyers are in control, right? So it's a very straightforward way, right, to decide location based on what kind of change would occur if that level, if that zone is violated, right? So for example, if this zone flips into supply, okay, then this change, right, all of this support off of it, obviously that's being negated, and we should be looking down for affirmation of this July 2024 high to be to start flipping into resistance if we can't hold over this guy, right? This guy is kind of represented. I mean, technically we should use this guy, right? This guy, which is representative of the July 2024 high, but you see what I'm saying, right? They're all just reference points that essentially reference change. Okay, so that is really it. So this guy, if you rock this fella again, I think you did have hourly oversold conditions. Obviously, you can chop it up, throw your stop under the local low, and then just go from there. You really just want to see some daily demand and breakout before walking a stop up if you recycle this trade zone. Okay. Oops, no, that's not right. Moving on to the Qs here. So the Qs also recycled trade zone coming back into play. Again, the whole reason for this was just a back test of what this trade zone is based off of the July 2024 high holding, right? Because as we've said ad nauseum now for weeks or months now, as long as we are holding over 503.51, then of course this November breakout is affirmed, right? And so if you're looking for these pullback plays, of course, this is an area that's indicative of change, right? If we get under this July 2024 high, then this change that occurred, right, is being negated, right? So it's unchanging. This change is being unchanged. This change is being unchanged if we find acceptance under 503.51. So this zone was just looking at the prior 2024 high and these areas of demand sitting right on top of it. And again, that's how you want to pick location, right? It's much easier to get your risk tight when you are always being super picky with location. A lot of my daytime frame setups actually also have to do with the dynamic developing value area low and point of control, but that is also a means of monitoring change, right? Because if you are under the developing point of control, then the sellers are positioned well to move value lower on the session, right? And so if you're looking for a lower high, for example, then you want to see failures at the development point of control. You want to see buyers unable to get positioned well to move value higher. You see what I'm saying? So it's everything that I do is based off of some affirmation or negation of change. Okay. So anyway, and that's all. Most of that is from Mr. Dalton and his option theory stuff. Check it out if you're interested. I highly recommend it. Okay, so there's really not much else to talk about for the Qs. That's not real. That's not real. So that's some error here. I don't. It's a scam wick. We didn't get down on that session. So this was, I believe, an incomplete gap fill. Oh no, it was a complete gap fill and then no acceptance under the regular trading hours high, and then pretty much just oscillating around this December 4th to December 10th point of control. So this is the key. Let me just get this out of the way. From a management perspective here, it's the same dealio, right? You want to chop it up, thirst up under the low. You want to see some demand established first, right? And then break out. And then if you recycle the RO trade zone, then you're doing just fine from a management perspective, okay? So all right, so we care about this guy. Why? This is pretty much the most clear area of sideways. Now, obviously, there is still some supply. There's still some price action above this guy, but there's not really any clear sideways here. Like, this is like an hourly supply. We could mark that up on the hourly, no problem. But I care more about this fella here because you can see how much more volume is traded here at this 521.74 level. It's come into play many times with the high of the day being set off of it over here. Drop and pops off of it. I mean, if you were to zoom in, I think you would see a lot more detail around the level. You can see there's like a constant struggle for it. Intraday, little baby lower high over there, right? It's a constant battle for it. So that's just pretty much what I'm looking at, right? I care primarily about this guy because this is the last step where these buyers were unable to hold a back test of it as demand and then advance to new highs. If these buyers were able to hold over this guy back here like this would have all been very constructive on the daily time frame. But because we came all the way back down to this July 2024 high and then started trading sideways, this is only constructive now on the weekly time frame, on the monthly time frame, etc. The weekly is fine because the weekly is trading sideways here, and as long as you're finding acceptance over this weekly chunk, then you're doing, or block, most people will call it a block, then you're doing fine. Order blocks, right, or whatever. Okay, so lots of space for a daily higher low. Anything over 499.70 is going to be good for one. And I mean, technically, a space for a lower high. I wouldn't really put much weight on that, but so what do we care about next week? Very similar to the SPY, right? There's a lot of space for that daily higher low. So it becomes a question of, can we set that higher low? And if we do set that higher low, you know, how deep is the retracement? Or rather, how much change does the retracement create? So next week, if we can come back down and hold over 519.16, then we're continuing, the buyers are continuing to chip away at this supply, keeps them in really good standing for a go at new all-time highs. We're really not that far off of the highs right now, just 3%. It's probably less than that for a SPY. It's probably like 2, or to the close is like 2%. To the high is, we shouldn't do the high. So anyway, that is really it. So 519.16 is really what we care about next week. And if we lose 519.16, I honestly think that holding over 513.24, the point of control of this guy, is still honestly pretty solid defense here, right? Because this guy is sitting on top of this much larger area of demand. And yes, we have traded almost to the other side of it, but sellers couldn't find acceptance under it. And so I would suggest that this big structure, looking at it as one block, is still being affirmed as demand. And so very notable then if we can just hold over this guy. Holding over this guy and trading sideways like this is the next best scenario after holding over this guy. This would be the best case scenario. But this holding over this guy next week would demand that we drive higher first. If we drive higher first next week, eyes on 530.61, it's the high of this range, to see if these buyers can just really press the issue here, which I think it's going to be kind of challenging considering, you know, Apple. We don't usually talk about Apple, but it's kind of drilling right now, and I don't know, I think it would be rather hard, but not impossible by any means. So we shall see. Because, for example, Apple was down the week, and QQQ was fine, and we are coming back now to like test a, you know, key area of demand. This is probably a put selling opportunity here, in my opinion. Like selling strikes down here closer to 210 or so. Anyway, it's not really within the scope of this. Okay, so that's pretty much it for the Qs. All right, so next week all about 519.16, 521.74, and 530.61. Moving on to the rut here. So for the rut, the market's being very clear, right? We're trying to resolve this structure, okay? So just like last week, if you recall, we were discussing some plays that we did in our futures room. which was just looking for affirmation of this rejection, right? So pretty much a similar situation happened, right? Where you went coast to coast, right? Where you get a rejection from the high of the structure, you get a drop and pop at the low of the structure. Again, the market is letting us know, okay, this is actually, we care about this guy. So it might actually be a bit premature to have moved this structure forward, but I honestly think it's fine. It's offering pretty similar guidance. Like this value area high was barely a difference. So anyway, that's pretty much it. Daily higher low has been established at 222.71. It's all about 227.17 from here. Next week, if they can find acceptance over 227.17, then these buyers should be trying to get to 230.55 next. That's the next area where there's any kind of supply, any kind of market acceptance here. This is all pretty much one-way trade, again, based off of the, or inspired by the FOMC reaction. So obviously we're seeing some relative weakness in the rut, as we have been, because there's much more supply in the way. We're very far off of the all-time high compared to QQQ, the ES, SPY, QQQ, ESNQ. And additionally, the election gap, right? So not only was it filled, they found acceptance beyond the November 5th session. So again, just a lot of relative weakness in the rut. If you are a seller, you probably want to be, in general, picking on the rut, right? You're probably going to get more decent follow through on day plus plays. So that is it. Oops. Moving on to the Dow here. Oops. Okay, so the Dow, again, bear break, no follow through. You are using this recycled zone. It's another situation where you probably don't want to wait too long to chop this up, no later than the 439, not the original target. Pull any lower bids, walk your stop up. If you see demand and then breakout, then you can walk your stop up again, but before then, I would not. So very notable to have this consolidation break down and then again not be able to trade through the lows of this structure. This is our reference over here. Not sure what the dates are, but here's our reference over here, and you miss coming down. You know, it's always really valuable, worthwhile to assess not just what the market does, but what the market doesn't do, right? It's kind of like how people say, you know, like don't listen to what people say, right? You know, that's what they are. Well, don't listen to what they say. Watch what they're doing, essentially, right? So you know, if they say they're gonna do something but they don't do a thing, obviously that's very telling. That's very good information. Right? So we know the sellers and the buyers are always saying something, right? They're always saying, well, they're not really saying it, but they are essentially conveying that they want very clear things. Buyers are saying they want infinity. They want to go up and to the right forever, right? And sellers are saying they want zero or even negative, right? So on the way up to infinity, on the way down to zero, we have these references. We know the sellers are trying to get to zero. We can use all of these references that we see on the way down. And if they fail to get to the next reference, this is always very notable. It's like, I don't know, like a football team getting stopped at the 10-yard line or something like that, right? On offense. So anyway, that is pretty much it. Lots of space for a daily higher low now. Anything over 418.51 will be good for one. And it's really what I care primarily about is 426.45 next week. If these buyers can hold over this guy as demand, well, then we should just expect more price action similar to this, all of this up here. I would not honestly make this more aggressive because I think what's happening right now potentially is we're just trading sideways. So if we are going to just keep trading sideways here, I would just continue to use this zone here. It's the same reason why I didn't really like that aggressive zone up here, because there's way more volume traded down here. It's already been affirmed here and it's been affirmed over here. So I would just continue to take trade here. Like to be a little bit more aggressive is actually a mistake that I made on one of the recent swing report ideas. You know, whatever, it was a stop out, no big deal, but it was an error. So I in my opinion. So that's pretty much it for the Dow. Moving on to the dollar here. So the dollar dipped into our aggressive trade zone for ads. So obviously we were looking at this already from down here, and we saw this major breakout over this guy. This is super notable. The dollar has not been this strong in a very long time. So in at this point now, looking for a back test of this supply now acting as demand continues to be reasonable. So I think I continue to maintain this is a pretty reasonable trade zone. If you want to be a bit more conservative and like drop it down into this guy, like this, right, and cover your bases for this whole structure, I wouldn't fault you for that. But I'm just going to leave this here for now as a reference for this one because we created it for this pullback. And so now daily higher low is trying to be established here at 108.420. Got to break over 109.260 next week. And technically they did set that daily higher low here at 108.420. Just not a lot of acceptance. And right now it's just a battle for 109.365, which is just the low of this big chunk over here, right? So if not acceptance over 109.365, then we should expect price action more similar to this, right? A battle between this supply and this demand. This price supply now acting against demand. These are our two key references. And I guess eventually I'll mark this up, but for now I'm not going to because I haven't and I don't want to waste your time. So that's pretty much it for the dollar. I wouldn't adjust any of this. I would pull these bids lower now. And then if you stop out the rest of this position, that's fine. You just book a small win over here. And obviously, if you're still in from here, you're not doing anything. Your stop can still be under here. Once you see some, I mean, it can be under here as well, but a more conservative stop is just under here. Obviously, that would still guarantee you some pretty solid gains. And if you could, if we see this, all right, trade sideways breakout again, okay, fine. Then I would be more confident walking our stop up to over here. All right, so that's pretty much it for the dollar. Eventually, we're going to see some weekly retracement, and then there is a good amount of space for a higher low over 105.402. Moving on to NVDA. So NVDA flirting with this trade zone again. You know, I don't really love it. It's a more aggressive trade zone. I kind of think NVDA is probably entering a period very similar to Microsoft, where we just kind of trade sideways for some time. I could be wrong about that, right? Because, you know, Microsoft started doing that first. So essentially, if you were to bring all of this price action together and just make it kind of next to each other instead of advancing, you pretty much have the Microsoft chart. So, you know, I'm open to being wrong about that. But as of right now, the Fangman T names seemingly are just kind of taking turns consolidating over lengthy periods of time and then breaking out, consolidating over lengthy periods of time and breaking out. And so as long as that's the case, that's fine. And this consolidation, even if we were to lose another 40-30% from here, would still be constructive relative to this much larger structure. Like on the weekly time frame here, we're still fine, right? Like this is the guy that we primarily care about. This is a bit of a red flag, you know, to break out and not really see that much acceptance essentially has the psychology of a rising wedge, or if you're a market profile or a volume profile, value is overlapping to higher instead of being a clean break higher. So, you know, certainly a bit of a red flag, right? This is a very notable selling space for a lower high under 153.13. Got to break under 135.46 next week in order to confirm that daily lower high at 138.75. And then we're just going to be looking down at our next references, which again, I'm looking at this guy primarily where this volume spike is. And then I really primarily care about down here. Like I would much prefer selling here. You give me daily oversold conditions and I'll start a put selling campaign for sure, targeting like the 100 area or so. You know, that being said, hourly oversold conditions into this trade zone I still think is reasonable, but again, a bit shakier now that we're seeing these higher highs, not really seeing that much follow through. Okay, so that's pretty much it for NVDA here. I still think this is fine for like shorter term operators, right? It's already worked once here. I still think this is very reasonable. But again, I personally, you know, I've already been selling right on the rip up. So, you know, I would prefer to get entries closer to the extremes of range, right? Like for the swing trading operations, for the long term operations, I don't really care to be like very aggressive trying to get momentum stuff. Usually, I'd rather look for value plays once the market is trading sideways, you know. So anyway, that's my shtick. Moving on to Bitcoin here. So Bitcoin dipped into the trade zone, and you know, like we've been saying for months now, as long as we're holding over this demand zone established from November 11th to the 18th, then all of this consolidation is still very healthy. So we have space for a daily higher low now over 8902, 8.64. Anything over that's going to be good for a daily higher low. But of course, you know me, I primarily care about the key levels of this local demand zone. 93495, obviously the high of it. The value area high at 91606.34. And then of course, the point of control 895 for 1.25. This is again another situation where the market is clearly telling you that this is important, right? Where you hold the value area high, hold the high of the range, hold the high of the range, hold the value area high, hold the value area high, hold the point of control. It's like, you know, the market generated information is really what we want to be going on, right? Like when you, like, even something like a moving average is technically not pure MGI, it's derivative MGI, right? Like it's taking market generated information and then it's deriving essentially a dot plot. Is that appropriate? I think you would you can call it top lot, right? Because you're averaging the last, like if it's a 12 EMA, whatever, you're taking the last 12 closes, averaging it out, and then that's your moving average, right? So it's derivative, right? It's technically not right from the horse's mouth, right? It's like one layer, 1 degree of separation away, right? It's like if the horse spoke to a dog and the dog told you, you know, obviously there's going to be some disconnect, right? Unless your horse speaks dog or your dog speaks horse, or you speak both. Anyway, so that's really it for Bitcoin. You know, like I think again, I would continue to use this trade zone. You're a short-term operator. You're doing fine. You're looking for extension into this guy because you just do what works until it doesn't, right? That's what short-term operators. That's what traders do in general. But me, bigger picture, I would much prefer we'll drill down here and we'll back test this big old area of demand, and then I would be more interested in buys there, just like this guy back here. So that is pretty much it for Bitcoin. And then for Ethereum here, so Ethereum still showing you a bunch of relative weakness. Again, we are still just chopping around in this big old range. So I would not, and the ratio chart is, you know, not doing so hot. So I would not be surprised if Ethereum eventually made its way back down to test this big old area of demand. And I'm primarily interested in it over there. So again, there's really no change for me, right? Because this is the supply that's being problematic. All right, we're watching this local demand, really. Like I know I still have this old structure marked up here, but it's, you know, going to be more or less the same as the levels, that the key levels of this guy. So really we care about this fella over here. So that's it. Daily lower high potentially being set here. Technically, you can still call it a lower high under 3527, but also space for a higher low over 2913.75. Okay, so that's pretty much it. And then finally for CCJ here, so CCJ, again, kind of trading sideways, bit of a janky head and shoulders. All right, so it's really all about this guy, right? This prior all-time high structure from all the way back in 2007. You can see how that guy was problematic here, problematic throughout all of this, and now these buyers are trying to defend it again as resistance. So pretty notable defense. This is pretty high volume. Looks like we backed off right. Oh, did dip into our extended, our conservative trade zone. So this is a situation where if you did initiate on, you probably did have hourly overbought. So the signal probably was there. Let's see. It technically was there, right? So you can, you know, look for like a day time frame setup for something like this. But given the context of this situation for CCJ, like this is not a situation where I would want to have a scale and then just go into the next week hoping that it works out. For me personally, I'd probably look for a day time frame setup. And this is the kind of situation where, because we set up this zone based off of the value area high of that key structure. So this is a situation where you wait on the lower time frame. This is pretty much like the examples that we always show for the day time frame stuff that we do in the futures from. I want to wait for price to arrive at that location and then look for your low time frame setups. It's kind of like, you know, like a strategy and tactic, right? Like if your strategy is to like a feign retreat or whatever, right? Why are you doing a false retreat or whatever, feign retreat? Probably to get your adversary right into a bad location where you can then deploy whichever tactic that you have, you know, to maximize like a kill zone, a kill box, or whatever, right? So that's the that's the idea, right? You want to refine that entry, so no bigger picture. This is where I want to take trade, and then we zoom in, and then on the lower time frames, look for something, a tactic that we're familiar with trading, an edge that we're comfortable with trading, because then that opens up a lot of asymmetry, right? We don't have to carry so much risk, and the upside potential is actually increased, right? Because we carry less risk, our size is larger, you know. So anyway, let's take a look. I don't know, I'm not sure, but I bet you that I'm sure there was, I'm not sure, but there probably was some kind of day time frame setup. Okay, so for example, here it is, you know, you're approaching the level. You can just do a very straightforward, you know, sell of this break, I guess. Let me see here. I guess I would prefer like on this 1 minute time frame here, right, where you're pressing higher. If you tried it here, it's a little premature, but I can understand if you got a little bit antsy here and tried it early. Technically, I think we had it marked up. Let me just sync this layout here. So there's your trade zone. You've got it laid out. You're thinking, okay, that's where I'll take trade. You see price comes into the trade zone. All right, you have a pretty straightforward stair step setup. You can sell that, throw your stop over the high, and then chop it up here at the developing point of control back test. that creates massive R, and I'm sure that is like no risk at all. So you can throw your entire account just about at it, right? And then essentially get this, book this 0.76, so 3/4 of a point. Book another, if it gets to the deval, because it doesn't get to the deval by the end of the session, I would still just close out more of it, right? And then just throw your stop over the high. Then you get this. Again, this is a, you can throw your whole account on it, so it's only 0.76%, but you're only ever risking 0.15%. So even if your stop got blown out with slippage, you're not going to surpass like 1% of the total account, for example, which is pretty common risk limit. So you would get like a 0.76% entry. You close out another one at the close here, right, just to give yourself more profit. So again, this is like your entire account that you've just put a 0.75% gain on, and then for half of your account you put a 1.79% gain on, and then you can just very comfortably ride that runner into the sunset, and into Friday's sunset. And then on Monday you don't have to be too worried about whether or not these buyers are going to press on from here, because as of right now at least, these buyers are doing just fine, right? If you, on the hourly time frame, you're just looking for hourly high or low, and this breakout is not yet negated unless back under this guy, so these buyers are looking just fine. And you have this local daily demand zone and this major point of control. So again, this is a situation where if you did initiate in this, and if you didn't do something like that and you do have a full position, that's fine. It's a lesson, right? Just recall, just keep it away in the old noggin. Wow, this somehow turned into a really long one. Oh, okay. So that's pretty much it. I still think this is a very reasonable trade zone, targeting this guy over here, which is just essentially trying to negate this big old breakout. But we shall see. Okay, so for show and tell, I actually did do a strong report play, but I've got all of this stuff instead. So maybe we'll do the strong report play next week. But I just wanted to show you guys, I guess, some more examples of how to put it all together, and I also wanted to show some stop outs, right? Because I don't ever want to make it seem, we're the chart guys, we're not the Lambo get rich quick folks, we're not trying to misrepresent it. It's hard. It's hard. It's a craft like any other. It takes like roughly 3,000 hours to get like somewhat okay at it, like roughly 6,000 hours to become adept, and then roughly 10,000 hours, right? That's a general estimates of quality hours before you can like even get approach mastery. So we don't want to misrepresent and make it seem like we only talk about winners. No, definitely not. And we're very public in the chat room. And if in fact, let me just do it like this. I'll just show you what we do, what like the culture of the room. Hang on a second. What we do is hang on. You know what? I'll just click one of these guys, and I'm sure there will be a bunch. Hang on, let me just click into this guy here. Oh, I know how to do it like this. So what we like to do is if you stop out of a position, we always talk about it. We're not afraid to say, hey, listen, we stopped out. There we go. Here's one of mine. And we just drop a helmet emoji on each other to remind each other why the stop is there. The stop is a helmet, and the helmet is in reference to I love helmets. If you've never seen it, it's this fella, and he like falls backwards, cracks his head, and he gets up and he goes, I love helmets, right? Right, because he would have, that would have been really bad had he cracked the back of his noggin on the sidewalk. That's like, definitely concussion territory. So, if not worse. Anyway, so that's just a little fun that we have in the room. But let me show y'all what we did last week. So again, to put everything together, the context of it all. A second here is over. Oops, hang on a second here. All right, so on the 15th, I am thinking, all right, well, on the 15th, it's this day, right? So on the 15th here, it's a gap up day, And so gap guidelines are in play. It's kind of a bigger gap, so you know it is a little bit tricky when the gaps are big to try to go with the gap. But the gap guidelines suggest that you go with gaps that don't fill right away, right? Because obviously, if the gap doesn't fill, well, then what does that mean, right? It means the opposite team, the team trying to fill the gap, is obviously not very strong, right? Because the buying team for a gap up created a big old change, the gap, right? And so the selling team, once they get going, they're trying to negate that. And so if you can't negate the gap, then you don't even get in yesterday's range, then obviously day plus buyers remain in control. You see what I'm saying? So that's the logic behind that guideline. Now that doesn't shake out so well because after I buy the new high and I have to stop out pretty much right away, just a few minutes later on the ES here. Or actually, I should just go here on this chart. On the ES here on the 15th, was it the 15th? 15. Okay, so I just buy this new high, triggered in on this move down, stop out, whatever, right? It is what it is. Sometimes stop out, no big deal, very small stop. And then on like a few minutes later, 20 minutes later or so, then I start to focus on RTY. And the reason why I start focusing on RTY for a potential sell is because this is what the daily chart looks like. Here's the 15th, right? And so we gapped up. Remember, this is the relatively weak name, right? And I just failed to buy. So I'm thinking, okay, like maybe I'll attempt to sell if these buyers are not going to be able to hold over the gap. But the ES and NQ, they were doing fine, right? Where, you know, they did, here's the 15th, here's the 15th. So yes, there was some selling there, but again, I know there's relative weakness in the rut. And so if I'm going to switch gears here and try to go to the other side, okay, I'm going to pick on the rut usually. And so on the rut, on the 15th, excuse me here, we're over here. And so for the 15th on the rut, we're thinking, all right, I'm going to sell this 30-second stair step after the diva miss, looking for the Deepak chop. And so that's over here. That's over here. Sell that. SS, you missed the developing value area high. It's a notable failure on the buyer's part, right? We're under the open. So here's the open up here. So I'm thinking, okay, it's pretty reasonable to be trying to go with the sellers as long as we're under the open, because if these sellers are going to hold under the open, then they should try to get here next, right? Their next objective should be this daily value area high, which, you know, we've been talking about constantly on these videos, and also of course in the morning rundowns, which again, we do every single, or I do most mornings. Sometimes I miss Mondays. But that's pretty much it. So that was the idea. That's like the framework for the trade. And so I look for that attempt. And again, it's a stop. So here's a situation where it's a chop and stop, I guess. Here, you sell this SS break, right? You throw your stop over the high. You chop it up where the Deepak was. Chop the RTY where the Deepak was. You stop it out over here. And then you got to do it again here because the context is still the same. So what do I do there? I say, okay, I stop the rest. But then just a few minutes later, I say, okay, una mas, the RTY, pass back under the diva, looking for Deepak, stop over local high. It's just responsive trade. I'm just looking for a responsive trade here, right? Because if you're not going to find acceptance over the value area high or the value area low, then what's price doing? Price is just trading sideways, right? So I'm trying to position within this sideways range to see the potential for follow through, very similar to the dollar, for example, right? Well, the dollar is a very similar situation where we were looking for responsive trade, right? We're looking for a responsive trade here for a price to continue to do this. So we bottom fish off of this guy, look to get to the other side, and then potentially hold a runner for if it does break out, right? So if you followed along on this trade, that's essentially the situation that you found yourself in. And the RTY was similar. We know that we are under the open. So the open is over here. We're under the open, right? And so cash market sellers are in control. And so if the buyers can't hold over the developing value area high, that means at best we're trading sideways. So I can play a responsive trade on the high end of the current range right now using the diva, the developing value area high, and my low time frame setups as a tool or a reference, and then play to get to the other side, take my risk out of the equation, and then see if we can get some follow through on that, right? Because, you know, the prior attempts was one small stop and then pretty much a free trade here, a chop and stop here. So we're down, maybe at that point, we're probably down like 35 points or so from the ES. I started size to add, so it wasn't like a massive size starter or anything. But then even on just to get here to the other side, we recoup that essentially, right? So Anyway, that's the idea, right? So you chop it up at where, let's see, Deepak was out more of the RTY sell before the low of the day test. So that's over here, right? So we're still in this guy. They almost get us here. They almost get us here. They don't. We get another exit here near the low of the day. And then finally, we get the last exit at 11:30 at the value area high, right? Because we were looking for this guy, right? We were looking for this fella to get tested, and lo and behold, that is exactly where these buyers have sellers, I mean, ran into problems, right? For both sessions in a row. So I say, okay, listen, like it's a pretty reasonable place to hold for the potential daily lower high, but I'm just trying to get used to TradingView's platform and the way that it's linked. It's honestly not great because I'm used to being on multiple tabs, and when you're on multiple tabs, sometimes you're logged into one and then it logs you out of the other. So I'm not loving it to be completely honest, but we'll see how it goes. Let's so anyway, that's pretty much it, right? So that's that complete trade. Again, it's a stop, a chop and stop, and then a very nice winner, because this one alone would have recouped all of the most of the points from the ES attempt. Okay, so should be 21 ES points. Anyway, that's pretty much it. And then if we move on to the 16th, again, a very similar situation, right? So again, what I want to highlight is that don't be afraid to stop out. That's totally fine. A controlled stop that's just part of doing business, right? And two, if the context remains the same, you have to be willing to fire off again, right? It's the same exact context. So again, for the RTY, this context is still the same. We're still under the open, right? We're still not finding acceptance over the development value area high. I have to take that try again over here, okay? So not that I have to, but if I still have risk capital allocated to it, I should try again. All right, so for the NQ, then the next day, does this get blocked? I guess. All right, so for the NQ then, okay, so on the 16th, I sell the Deepak, pass back under the NQ, looking for the deval for the chop. That is the 16th, right? Okay, so on the 16th here, I believe, sold Deepak, pass back under NQ, looking for the deval for a chop. So that's over here. Sell this Deepak failure. Why? Because we're under the open, right? And so well, let's start for the daily chart here. So the daily chart is over here on the 16th, and this is another situation where it's very similar to the IWM sell from back here, right? Why it's kind of similar, where we got in on this day, which was looking to affirm this day, right? So it's very similar kind of daily context where we are positioned at the highs of the range. So we gap up into the low of the key supply that we're monitoring for, and it's already a few days into the bounce, and that doesn't even matter, right? Because we're not predicting at this point now, where we've waited to see what happens at the open, and the opening drive was lower. So now at this point, we just want to go with the seller, or at least that's what I was looking to get done. Technically, from a session to session perspective, the buyers were still fine because they were just looking to backtest the value area high of the prior session. So, but I talk about that logic, right? So, because again, in the room, we always talk about why we enter the trade. We're not posting our trades to have other people copy us. We're trying to be accountable, think through everything, and then allow other people to review and assess what we're doing as well, right? And so, we're just trying to refine the game, right? Steel sharpens steel, as they say, right? One friend sharpens the other. I think that's the parable or whatever. Anyway, so that was my logic, and at the let's see, so I chopped it on the deval, and then I point out that the low of the day is pretty much yesterday's value area high to the tick, so the low of the day at that moment was pretty much that guy to the tick. And then I get stopped out of the rest of the NQ, so it's a chop and stop situation, bit of a free trade. So again, that's a sell here, chop it up, stop it out on this move, and then again, the context is still the same. We're at the developing value area high, we're still under the open, and so I just try again, right? Uno mas. This is the logic. I was thinking, if we daily level rejection should get to YVA, and if under the YVA breakdown, we should get to the O1L, the overnight low. And so I say again, uno mas on this stair step break, chop it up at the Deepak, out more at the developing value area low, and then out more at the O1L, yesterday's point of control. So again, that's sell this here, sell this here, chop it up, stop it out, sell again, chop it up, and then at the ONL and yesterday's POC. Oh, really? I guess that was lower. So, okay, so that was lower. So another chop here at 21355. 213. So this is just a little bit of a discrepancy here. So 355 is over here. And then let's see, the last one is here on the test of the daily value error high. So again, it's a very similar context to that IWM situation where I was looking to fade this move, right? Because they weren't holding over the gap, and then chop it up here because the sellers probably start having problems. If they're, I don't know that they'll have problems, but if they are going to start having problems, it should be somewhere over there. So that's what that's the whole logic of that. And so if you look on the QQQ, it's the same idea. You hit that sell off the open, right? You're chopping it up on the way down, and then over here is where these sellers might start having problems. And if you zoom in, I believe they do have problems there, at least initially, right? So you do have this initial bounce here, and then at the end of the day, you do drill down lower, but that's exactly where they bounce. So again, that's how you take the information from these videos and apply them to the day time frame, and then you might even potentially get some swing out of it, right? Because if you nail something on the day time frame and you can hold the runner, risk-free runner, it's really easy to hold that runner. And if you hold the futures runner, because it's a leverage product, it adds up very quickly. So if you're interested in learning how to get it done just like that with a group of super supportive traders, check out the Chart Guys community, links in the description below. If you're interested in the swing report, which is just 2 novel ideas every week, a breakdown from Dan, a breakdown from me, live callouts for any trades that I do trade. I don't trade all of them, but live callouts for any trade that I do trade. Check out the swing report, links in the description below as well, I believe. And if you made it this far and you got any value out of any of that, very much appreciate a like and subscribe. Helps us out a lot, costs y'all nothing. And that is pretty much it. So, appreciate you guys tuning in. Thanks for sharing some of your time and energy with me. And I hope to see y'all next week. Very well.